In order to curb tax evasion and black money, many steps were taken by the government and the income tax department in the last few years. According to a Central Board of Direct Taxes, there is a sharp increase in prosecution of tax evaders by income tax department. Apart from facing prosecution, which could lead to imprisonment, there are also various circumstances in which an income tax assessee may have to pay hefty penalties. Penalties, even imprisonment, can be invoked due to ignorance or laziness, as well as willful actions leading to evasion of tax or any income tax related obligation. In some cases, you may have to face both penalty and jail. Under the provisions of the Income Tax Act, the tax department is authorized to impose penalties when the assessee defaults on payments of taxes or when he or she underreports or misreports income. Penalties can range from Rs 100 to a maximum of 300 of the tax sought to be evaded, in addition to the tax payable. When criminal offence is established, a jail term between 3 months and 7 years can be given to the offender. In case of late payment of tax, the Income Tax Department has prescribed timelines for paying advance tax and self-assessment tax. If you fail to pay these taxes on time, an assessing officer can impose penalties as per his discretion, not exceeding the tax in arrears. Now, let us look at late filing of tax return consequences. According to Section 139(1) of the Income Tax Act, an assessee should file his or her tax return by due date, which is usually 31st July of the assessment year. Under Section 139(4), you can file the return within 1 year after the relevant assessment year gets over. After that, you cannot file your return for that year. In case a taxpayer fails to file a return within the prescribed period, a penalty of Rs 5,000 will be imposed if the return is filed post due date but before 31st December of the assessment year, and Rs 10,000 in any other case. However, willful default in filing a return can also lead to imprisonment, which shall not be less than 6 months and which may extend to 7 years, with fine where the tax sought to be evaded exceeds 25 lakhs. In other cases, imprisonment can be of minimum of 3 months or maximum of 2 years with fine. Not producing books of accounts. It is the assessee's responsibility to maintain and furnish documents to authorized persons for inspection on demand. If assessee fails to provide such documents under Section 132(1), 2b of the Act, they shall be punishable with imprisonment which may extend to 2 years and shall also be liable to fine in accordance with Section 275b. Income from undisclosed sources. Not only it is mandatory to disclose all income, one also needs to disclose their source. As per Section 271(a)(c) of the Act, an assessing officer may direct the taxpayer to pay a penalty at the rate of 10% of the tax payable. The officer can also impose penalties if there is any addition of income due to unexplained cash credits, unexplained investments, unexplained money, amount of investment not fully disclosed in the books, unexplained expenditure, or amount borrowed or repaid on hundi. Now let us look at consequences of receipt of more than 2 lakhs in cash. As per Section 269(st) of the Act, a person shall not receive an amount of Rs 2 lakhs or more in cash in aggregate from a person in a day. In case a person does so, he or she shall be liable to pay penalty equal to the amount of such receipt. Now let us look at consequences of willful evasion of tax. As per newly inserted Section 270(a), if an individual is found to have underreported his or her income, a penalty equal to 50% of income tax payable may be levied. However, in cases of misreporting income, penalty equal to 200% of the income tax payable may be levied. Section 276(c) of the Act stipulates punishment for willful attempts to evade tax, penalty or interest, or underreporting of income. In such cases, a person may be punished with imprisonment of 6 months to 7 years, with fine where the tax sought to be evaded exceeds Rs 25 lakhs. In cases where evaded tax amount is less than Rs 25 lakhs, the imprisonment period would be a minimum of 3 months and maximum of 2 years with fine.